Alright, welcome. Today is the 27th of March 2020. It's 3:21 local time. I think it's a good idea to again give you a bit of a market overview outside of Forex. Of course, first of all, let's have a look at the US 500, the S&P equivalent. So yeah, the crash was expected, the pullback was expected, and now the base case for the next scenario would be some kind of trend resumption, breaking the low, going down again. That's a base case. It doesn't mean it needs to happen now. It could, for example, fill this gap here around the 2,700 level, overshoot a bit, and then go down. Yeah, that would be the base case. Alternatively, it does a trend resumption sooner than expected. The other scenario would be, for example, a little gap up and then move down. Yeah, or weekend gap. So I've said last time there are cheap investments such as various ETFs, and many of those made some really high returns within a few days. If you are a short-term trader, you can take advantage of this. I recommend you to take profits because base case is a trend resumption. Yeah, and of course you can also find some stocks at cheap prices if you have a longer time horizon. But even there, patience is key. I think it's unlikely that the market just does a V formation and goes up from here. The chance of that is maybe 9% or something like that. Not impossible, but unlikely. Normally, also for stop runs, we see a resumption, especially after this aggressive pullback up. So the market behaves basically within the base case right now. Let's look at the other ones. Bitcoin on the forward chart. After it took the 3,891 level, now did a not a 50% reversal, but also an aggressive move back to 6,593. Now rather at the middle of the overall range. I was bearish on Bitcoin, as you know, now a bit neutral. Let's look at gold. So gold did not do any up moves as a safe haven currency. It went down, however, now it recovered to the middle of the range as well on the 4-hour chart. $1,618 right now. Also pretty neutral. Silver with this aggressive down move and pin and stop run and retesting. Also did some kind of 40%, 30% reversal. Oil 22.67, extremely low price. I've said last time the Saudi-Russian oil price war, price manipulation, it's on. We have a gap here at the 40 level, but as you can see at the moment there's no big momentum in the market. On a historical basis it is kind of cheap, of course, but it's very risky to do something there, so I don't recommend to do any trades. Let's also look at cable. After this crazy 1,700 pip down move, it did some kind of 50% reversal around over 800 pips. Let's also take a closer look. So you see 1, 2, 3 retesting the low, boom, going up. Then when you go to the lower time frame, you see some house cleaning, in both directions to take out people with tight stops, boom, boom, and then just broke to the upside. Recovering from the exaggerated down move, and on a causality basis, this was also expected. I traded a lot in there as well. We had short-term stops. As you can see from the threads, there were short-term stops which they took out. So basically we are overall in some kind of pullback phase, and now the base case would be for the equities, some kind of trend resumption. This could happen within just a few days. It can be quick. It can happen with news and so on. Fundamentally, the coronavirus is still dominating the news. Countries are shutting down, and of course the consequences from that in terms of economics will be substantial, because think about it, suddenly not only are shops closed and people don't go to work, but the earth has just become a little less global. People are not flying as much around, people are not moving as much around, goods are not moving as much around, Of course, the governments try like aggressive rescue packages. The central banks agreed to do that, which has never been done before. But normally, you know, it's not that the market just turns on the basis of that. Often it stays pretty unimpressed, and then maybe later on, at some point, the market finds a bottom and some support. But these things tend to be rather slow. These are very, very intense times, historical times, and in terms of the crisis, we are probably just at the beginning. So there will be big moves, and of course, there will also be opportunities for the traders who had the patience to wait for these kind of time periods and who will be able to do some cheap investments along the way. But even there, it's important to have patience, to invest in different stages, to not go all in at one point in time, to diversify at least a bit, you know, and to do research and make a list of ETF stocks, currencies you're looking at, and then, you know, to wait for the right moments, to do some timing. Okay, that's essential in this game. So I predict that, you know, at some point in the future there will be, this year probably there will be some cheap price levels where you can buy short-term or even long-term investments. And of course, my focus is currencies. We do short-term trading. Those kind of moves, they are known to us. They happen on an intraday basis every single day. Of course, like markets such as Bitcoin, for us, they're just another currency pair, really, you know. So we prefer to trade the big markets, really, and, you know, to look at the market manipulation, the stop runs, and, you know, to do our trades there. But it's important to also, as a trader, to keep an eye on all other markets. Everything is correlated, as I said before. It's important to understand the bigger picture. It's important to understand the economic data. And this will help also, you know, in doing like swing trades, even like in the major currencies. Okay. All right. Just wanted to give you this short update. As always, stay safe.